begin with a small story of Mahabharata. So when Pandavas were in Vanvas, Kauravas, tried to trap them by sending Maharshi Durvasa to for a bhiksha, and at the same time, they had finished all their food, and they're worried. Maharshi Durvasa is a very angry rishi, so how to manage him, because this was actually trap coming from Duryodhan still. Thankfully, God, Sri Krishna came at the right time. He saw the pot. There was only one rice flake which was remaining. He ate that, and with that, he could calm down Maharshi Durvasa's anger as well as his hunger. Okay. Next 12, 13 years, Kauravas tried many things to defeat Pandavas, but they could not, because whose time has come, one cannot resist. So today we are going to talk about, the concept. I should thank Prem for doing this, because from that day, when this happened, the Akshay Patra actually was invented, and thanks for doing this event on such a day, where if we start today, it's such an auspicious day, where it will help us to grow our business as well as this industry. So I'll begin with wishing all of you a happy Akshaya Tritiya. Let this knowledge grow your wealth and health for you and for your clients. So coming to our today's topic, thanks to Prem for this line. I actually took from your. In fact, I'm going to thank Prem again. So, a lot of these questions, I don't know how many people you have seen in the Prem's invitation on his website. This is what passive is happening in passive space. Pie is getting bigger. It doesn't cannibalize your existing business. Okay, it can also help you to increase your wallet share and also attract clients. If you don't do that, somebody else will do it. So let's try to discuss on it. How this will affect our overall business, and how it can help your clients as well as growth of mutual growth of the industry. So Cafemutual. Yes, so we have seen this since morning. We have seen a lot of data, which is passive has grown as compared to it's almost 16% growth over last 9 years or so. Before that, we had only Sensex and Nifty and Gold ETFs were there. But now this industry has substantially grown. A reason to this is this. We have currently more than 150 unique strategies. I'm talking about 150 unique strategies with more than 500 or approximately 500 schemes on the passive space available in India. That's why we see a lot of growth in this space. How does that category evolve? You can see in all the categories, you have a lot of options like, size has now large, mid, small, also micro got introduced in the market. We have a lot of thematic story. Those stories you cannot get into an active space. The stories are available in the passive sector as well as thematic. The digital Sharia, ESG are available in passive space, and smart beta, which we've been talking about since morning. So now passive is available for every corner of your portfolio, and it is offering a lot of flexibility for an investor and advisor to use in the client's portfolio. Yes, so this is also very important to know what is actually happening. Why so much of talk is happening. This is the third edition of passive conference which Prem is doing, is because of this. We saw this in the morning. Right? Globally, the trend is changing. A lot of underperformance which we see. Let's see closely how it's happening in India. So we took 6 categories, and we try to see how the particular benchmark as compared to all the active strategies are doing. You can see so much of volatility, so much of deviation in the return in the top performer and the bottom performer. You're not sure whether this guy is going to remain here for how long. Okay, same thing in large and mid cap, it's happening. If we move to the next category, flexi cap, again same thing. Look at the deviation into funds. Mid cap, also same thing is happening. Small cap also you see, and focused. Here, no, I'm not going to talk about active versus passive. The point here I'm trying to say, if you're, and this is also a point raised in one of the panelists in the morning, that if your clients are here, if your clients are at this pace, you're going to face the heat of it, okay? And you're not sure how these guys, how these guys are going to continue. The overall objective here is, in fact, I tried to put something in table also. Then across the category, this was a 3-year returns which we just saw. Now we see 1 year, 3 year, and 5 year. The problem here is the lot of, problem is the lot of deviation which is happening from the top performer and the bottom performer. Here your role becomes very important. Okay, if you have sold, for example, say a couple of small cap funds and a couple of mid cap funds, what has happened in last 3 years or 5 years and 1 year also. If you had one index fund in that category, whenever you're selling an active fund, if you had one index fund in small cap, mid cap, large cap, what will happen? The overall underperformance of the client will go down. Right? Here we are not talking about active versus passives, because these guys are going to switch. The top buy guys are going to come down in future, but overall you have to manage your client's portfolio. So in each category, which we just saw, focused small cap, flexi cap, mid cap, large cap, and large and mid cap, you have passive options available. So, since morning we are trying to identify, how do we add passives? So in every category, you should have some exposure in the index so that overall clients' underperformance will come down. That's one point. Second, clients' cost also comes down because passive have lower cost. Overall, what's going to happen? Overall, clients' portfolio will look better. Okay. In fact, when you add passive by yourself, you are actually selling yourself. Your perception in the client's eyes will definitely change. Why? Because so much of media, so much of regulators, I'm talking about passive. And if you don't do it, somebody else is going to do it. All the fintech platforms, if you just log in, the first page which you see is passives. Right? So why don't you do it? That's one. Second, a lot of clients are trying to go direct. Right? If you get them in passive, the expense ratio is almost similar. The large active funds or direct plans and the passive funds, expenses are almost similar, 80, 90, 100 bips, right? Try to get them here so that client remains with you. So this is in your advantage to talk about it, have at least one product in each category or at least couple of categories to reduce underperformance and to create that impression. Secondly, you would have also noticed that a lot of investors, next generation is in the business, right? And if you don't sell a passive fund, they're going to say, Papa, there is no passive fund, it's globally so powerful. I don't know what your advisor is doing. So that will also help you to create impression in the next generation. Okay. So that's what you are trying to see. Add, one passive fund in each category. This can remain range between 10% to 30% depending upon, what is that you're looking at. So the question always remains, how are you going to blend it? What is that we should do? Here, it's not about active versus passive. It's always active and passive. Globally, passive piece is growing. But active is also growing simultaneously, but active is moving out of mutual funds and getting into alternates. Now in India, the problem is, alternate space is not that innovative. Of course, because of various reasons, including regulatory also, and market is also very, not that professional to understand, how to take a risk, right? So regulators going slow. So your active portfolio includes all those strategies which will give you alpha. Remember, you are going to active for an alpha. You're not going to active for market return, right? So this active means, you may be an active manager. You can have a direct stocks, PMS, alternates, all those benchmark agnostic strategies can be part of the active portfolio. Okay. And to balance it out, when you add passive, what are you going to get? Your overall underperformance will go down. You know exactly what segment you're buying. You know exactly what risk you're buying. Because passive can define the actual risk also of the portfolio, which may vary in these strategies. Okay. Overall, what will happen? Client's cost will again go down. Okay. The overall performance will look good in the client's portfolio. So, two approach I'm going to talk about, and I'm going to stop. So one is how to use it core and satellite. So you can take first approach where passive can be core, Okay, passive can grow as high as 50% in the portfolio. Okay, why I'm talking about this? Because when you do that, your overall underperformance goes down, cost goes down, but then you can increase risk on the other 50%. See, we always look at mutual fund versus mutual fund. Benchmark hugging strategies cannot give you alpha, right? So when you do this, what's going to happen is overall reduce volatility, reduce overall cost, avoid major underperformance. It's a common and time-tested portfolio design. So simply, you can take this approach. A lot of advisors in India have started selling only passive funds. And their AUMs are rapidly growing, 150 crore, 200 crore. We talk about remuneration. All mutual funds, you talk to them, now they are paying between 60 to 70 basis points. Sometimes some people are in fact paying higher than that as well, right? So there is no problem of, commercial here. Blended commercial will always remain around 50 to 70 basis point, active, passive, debt, all put together, right? So when you add that, you are actually adding a lot of consistency in your commercials as well. Another approach, very, very important, there are a lot of advisors, a lot of market participants still think that I can generate alpha. Okay, I need a lot of active strategies. So active can become your core strategy here. Active can become your core strategy here. And passive can become your satellite. What you do in satellite? You can use sector and thematic stories to increase risk in the portfolio. You can also use broad-based indices like Sensex and Nifty, broad-based indices to take market swings. Which market does it much better than an active strategy? So you don't expect, when market falls down and recovers, all active will actually copy that. Okay, but overall, you have to manage your client's portfolio. So what are we talking about? You can actually get more alpha by doing this. And there are a lot of strategies we just saw. So many options are available, including smart beta, including thematic and sector as well. Okay, and tactical calls can help you. And that's what we are talking about, advisors alpha. This is how you can add alpha in client's portfolio. So what's in it for advisor? You can, when you sell passive funds, the client acquisition becomes very, very simple, very easy. If I start talking to 250 people present here, I can talk about one fund and I can convert at least 200 people. But if I start talking about active, I have to explain a lot of things to him, right? So your time is saved to onboarding customer. That's very, very important. Your scalability also increases, your serviceability increases, and client remains with you. Secondly, for alpha, what is he getting? He's getting building blocks. Okay, a lot of options are available. So depending on client's risk profile, you can choose, whether it is smart beta, whether it is broader indices, or whether it is mid cap and small cap. No fear of underperformance because markets do not underperform. They are the benchmark and sustainable. That's what we can expect from passive. Very important slides. Disclaimer. Yep. So what are we talking about here? I have not finished. So what are we talking about here? Simplicity. Okay. Today on Akshay Tritiya, what is Akshay? Akshay means which do not decay. Index was there 40 years ago. Index will remain for 400 years after we may or may not be here. So that is actual Akshay, which you can add in your client's portfolio. Okay. I am going to close with a couple of lines today's session. बर्बादियों का सोग मनाना फिजूल था, बर्बादियों का सोग मनाना फिजूल था, मनाना फिजूल था, मनाना फिजूल था, बर्बादियों का जश्न मनाता चला गया, मैं फिक्र को धुएं में उड़ाता चला गया, मैं जिंदगी का साथ निभाता चला गया. Index investing, not investing in index funds can be injurious to your wealth and health. Thank you for your time.